Hello, traders. All right, let's turn this off. This is Red Ben. It is Thursday now, June 8th. And you can get a hold of me at Red Ben Trader on Twitter. And then if you want to learn more about the algo I'm using or the futures trading room that I trade in, the trade and perform room, you can talk to my coach, Simon. His email is trade, the letter N, word perform at gmail.com. If you mention that you found his room through me, he'll give you, I believe, a 5-day free pass to the room. Normally, there is a cost associated with the room and the algo. And just so you know, the algo that Simon's using is a lot more simple than mine. It's less information, I should say. And that's ideal for most people in the room, especially if they're newer. As you start to get the hang of how to read it, what many of us have done is added our own studies to the algos so that we can get additional information. And then I've also changed some of the colors and just how things look. And I'll show you the difference quick in case people are curious. So this is what I'm looking at. I've got a couple different time frames. They're all Renko charts shown at once. And then what his look like is more like, let me find the 24 tick because that's got the dots correct. There we go. So this is what his looks like in the same period, right? A lot like cleaner. Still a lot of symbols to learn, but not as many as what I'm using, which is, like I said, just more. But the things that he has are also on mine, even if they look a little bit different. I haven't changed what he's doing. I've just added to it. I'm not able to give any information about like how to build these signals. It's available for like purchase through him. You can get the algo on your desktop for a cost, and so it wouldn't be correct to like try to figure out how to build it yourself when it's available just to buy it. If it's a signal that I created, most of them took like alerted me that one of Simon's symbols had fired and then added additional filters or more information. So even if I explained what some of the ones that I do know, how they come about, if you tried to replicate it, it wouldn't, you wouldn't have the whole code because it's missing the the source, right? It's saying look for this signal and you don't have that signal. So just so you know, like I can't, don't ask me to share it or like tell you how to make it or whatever. Like that's, I literally can't, but wouldn't anyway because it's just unprofessional to give away something that someone else is offering for purchase. And honestly, it takes hours and hours and hours to like come up with some of these and actually code them, make sure they're doing what you think they're doing, back test them. Like it's a lot of work. So I'm all about like helping other people and giving whatever's reasonable away so that other people can be more profitable as traders. But when it comes to coding stuff, like it's just too much work to give away. I'll be honest. Like for me and for Simon, like both of us are happy to share videos for free and ideas and stuff like that. But yeah, it's try it. Like if you've ever tried to build a system, it's cumbersome, but the benefit is that as a result of having a system, I don't have to struggle with wondering whether or not I should be in the market or not. Um, that is kind of dictated by the system. Now, I don't have this set up to automatically. Oh, I've got an echo. Sorry. I don't have this set up to automatically trade for me. It doesn't execute for me. I need to physically push the button on the DOM. But other than that, what it's doing is it's looking at things like the footprint and the time in sales and the order book and the profile and things like that, and it's just alerting me that certain conditions that I told it to watch for are present. And then a lot of these setups, just because markets are complex, you can't just enter because a condition exists. You need to look for something to happen when the condition exists. But rather than just teaching the algo to like look for the pattern of star followed by an X in the opposite direction at a location that I want to be long, which would be extremely difficult to like get right. I it's easier for me and for Simon too to program the conditional alerts, and then just learn like what you're looking for. And like I said, it might seem like that'd be harder, but the truth is if you had to wait for the signal and you didn't have any warning that that signal's coming about, you're not going to trust your system. Whereas I mean, eventually you would, but it's harder. It's harder to trust something if it's just like, when this turns green, just buy it. Like, everybody thinks they want that, and then they get it, and it's actually really hard to trade like that. What I find easier, and Simon finds most people find easier, is you program the conditions that you're looking for, and then you learn to interpret the signals in a pattern. And so like I can look at the signals and I know how to interpret them. And so I know what I'm looking for based on what I've seen up to this point. Like this pattern of star down followed by X up, that can be a long as the like situation is correct. You need to be above a support. You need to not be right into resistance. You need to have like higher time frame continuity, right? And if I tried to auto program all of that into the algo, it would miss a ton of trades. You'd get some for sure, but you'd miss a lot. So instead, the more like it might be a little bit more work mentally and visually, but you'll actually be more confident. I found in trading is once you just learn it like a pattern, like things that you can just watch for to happen one after the other. You don't have to worry too much about interpreting every single signal as they come about, because you already know what you're looking for. And usually the way this goes, if you think about it, is like overnight. So I come in to trade like in here, right? I've been sleeping for a while, and so the first thing I have to do, and I usually do this with a candlestick chart first, but also on the different time frames, is I want to take a look at what the algo looked like and what price action looked like during the time I was sleeping, because that's going to tell me which signals and which patterns I should actually be looking for. And it just saves a lot of mental work rather than having to try to do that on the fly. I'll just know based on what already occurred Like for instance, this is a very high time frame chart, and we're all of these are NQ for now. We can look at CL if you want. I've got that one pretty up to date. ES, I don't have all the signals rebuilt on there because it got so slow for a while that like ES was kind of untradeable, and so I spent a lot of time developing new ideas, and I haven't optimized them quite yet to ES, but they work really well in NQ, and so far they're working on CL, but I need to do more work on it to be sure. Like some of them work, but some of them need tweaking. ES, I literally just don't know because I haven't tried yet. So I haven't had to. I've had plenty of work to do with just NQ or NQ and a little bit of CL. So if I looked overnight here on the higher time frame, this is 67 ticks to print a new bar in the same direction. And then to print a bar in the opposite direction, you need to retrace those 67 ticks and then go 67 ticks more. That's just the way Renko works, at least the Sierra chart Renkos. And you can tell if you're not familiar with this, if it's a positive or negative bar by where the wick is. The hammers, the one with the wick underneath, are bullish, and which means that they reached the top of the Renko bar before they reached 67 ticks below the open, right? And then the bearish ones look like the hanging man. The wick is on top, and again, that means the inverse, right? So it went from this open, it went 67 ticks down before it could go and retrace this bar and then go 67 ticks from there. So when they reverse like that, if you look at, like I said, if you look at two in a row, if they're both going the same direction, so this is bearish, the wick's on top, and then it closed, so it didn't retrace this and go 67 ticks higher. And then the next bar was unable to do that as well. It was unable to retrace this bar and go 67 ticks higher before it went just 67 ticks lower. So what I'm trying to say is it's easier, in a sense, to print a bar in the same direction in the Sierra chart Renko than it is to print a bar in the opposite direction. And that works out because if you think about just how auctions work, once you've covered like this area, right, they're bidding up, right, you already have sort of worked through this. All the sellers that were sitting here, right? Like when the market was dropping and they're like, "Ooh, I want to sell this level." They put their sell there and they missed it, right? And so we came back and filled all those orders, right? And then there were no more buyers, so the price turns around and starts to drop. And once it gets through one of these, and it prints another one, what you're going to see in the Renko charts is that it becomes like twice as easy to print another down bar as it would have been to print an up bar. Because for an up bar to print, you have to go from here, because remember, price is down here, right? And it closes, and then it's here, and you don't know if it's going to be bullish or bearish. And so in this case, that would create a wick immediately for a bull bar, or on open for a bear bar. But in this case, price went all the way back through and retraced all of this, including, and then went from the open of the bar, which is the open of the previous bar, it went 67 ticks higher. So I guess I misspoke a little bit. It's not 67 ticks from the high to reverse. It's 67 ticks from the open of the previous one, right? So if it goes 67 ticks up, it's going to be a bull bar. If it goes 67 ticks down from the open, it's going to be a bear bar if it's a reversal like this. But this bar closed here. So when the next bar, quote unquote, opens in time, we are here. right? And I know that's confusing because that's different than candlesticks, but it means that when you have a reversal, you're going to see a wick, because unless there was a gap. So whenever there's a reversal, there'll be a wick. Reversal, wick, right? Down bar doesn't need a wick, but down bar, up bar is going to get a wick. And that's the same for that's just how the Renko bars work. So that's really important to understand when you're trying to interpret who's strongest, is recognize that those wicks mean something totally different when you're reversing versus when you're going in the same direction. Now, thankfully, you don't have to think about these things because they've already been programmed into the signals, but that's just how it works. So if you didn't know that, now you do. But anyway, I would look over last night, right, Wednesday night, and then Thursday morning on the high time frame chart, the candle chart, to find some locations, and then the lower one. That's the first thing I do when I wake up, is I'm like, okay, what did we do and where are we? And then based on that, where are my best opportunities and what type of setup should I be looking for? Should I be expecting continuation, or should I be waiting for a level to get hit for a reversal, right? You have to have that plan ahead of time. In my opinion, that's really the only way to trade well. So, at least for me. So if we look at yesterday, and again, you wouldn't know, you'd know up to all of this, because 8:30 is the open. So let's say we can get the value exactly. 8:38, 8:31. So up to here, if you were looking right before the open, this is what you saw on the 67 tick. And then if you want to go further than that, you probably just want to go to a bigger tick chart. But let's just, as you can see, the last day, Wednesday, was trend day down, right? And then overnight, we went lower than the close. And if you look at the brown here, that's Globex range. So Globex high is here and Globex low is there. Okay. And then, let's see. And this is 24-hour low, so that's going to unfortunately scoot down. But the close, it's hard to see in there. I can mark it here. It doesn't, it matters, but at the same time, it kind of, let's find it quick. So the settle is, let's say here. Let me just make sure I have that right. Is it, do I still have the old one on my other chart? I do. I had 3150. Oh, interesting. Is that wrong? That might be the close and not the settle. 1530. That's the... trying to see here. It's not the close. It's got to be the settle. But one way or another, that's basically, we're going to call that yesterday's close. So the more important level for the next day, if you were trading Globex, you need to know where the close was of the previous day. But the more important level is actually the low in this case when we're reviewing, because we want to, when it comes to whether or not we should expect reversal or continuation, we need to know whether or not there was excess put in underneath the daytime New York low. And if you see how it's blue here, that's because it was actually on the profile, it was a previous day's point of control. It was above the volume point of control, but basically right at the what's it called? The market profile point of control. Just the POC is like exactly where it bounced, which is usually it is long term not a very good sign. Those exacting bounces are usually done by smaller day traders in general. But if you put excess underneath that in the future and then you rip back through it, it can absolutely be bullish. But the first thought when we see this like exact bounce off the bottom is, even though there is excess here, that single print in like in the A period is it? Right, that's like it opened and fell. Oh wait, no, it's not A. I can't tell what it is. I'm too far away. It's definitely not A. It's just single print. Let's see. I don't remember if I actually have them showing. I thought I did. Yeah, let's not worry about it. It's late in the day. Not at the close, but late in the day. We closed here. Yeah. So, but one way or another, it looks like excess, but it's not, because the bounce was mechanical, in my opinion, off of the POC from 531. And then I don't know if I have more. I do. So if you back up further, you could, like, I added the low of that 531 day because I thought that might also be important. And then the volume area is marked in purple. So the purples is volume area high and volume area low of the regular trading session of 531. And even though that was a week ago and change, it's it's a week, because it's six, or yeah, like last week, let's just say. It's still very valid because of where we're trading, and especially when you look to the left of this and how this bounce occurred. If you know auction market theory, this should make sense, because so these are single prints in a trend day. So it broke through here and just ripped like from here on, right? And then there's these little low volume nodes. See that? Or not low volume. This is the market profile. So it's basically single prints, but they're tiny. It's like just a little bit. And what that means is that there was a time period where we are coming up and we hit that as resistance before continuing higher, or maybe went up a little bit but then came back and got stuck there for at least 30 minutes and then did it again. And then only then did we continue higher and put in another like chunk of time. Because remember, the left one is market profile. So that's like looking at whether or not price reached that area in a 30-minute time period. So you can just count how many lines you have, and that's how many periods rolled over that area. And usually when you have a lot of periods or a very thick market profile here, that's usually going to be the point where there's a lot of volume as well, but it doesn't have to be. But usually it is, and in this case it was. So on the right, we have the volume profile, which is just looking at how many contracts were done price like at each price, regardless of time. So where we should be looking for future tests is high volume edges in particular. So where there was high volume in an area, and then below that there wasn't any, like here and here, there was like an area that had a lot of volume, but then there's areas that like above and below that, right where that ends, those are the high volume edges. And then the other place we should be expecting some sort of test reject potential would be at the market profile single prints. All these little times where we had previous resistance or support and we were unable to roll back through a like a chunk of price, right? So that is what that's showing, more or less. And so if we look to the right and you see where we bounce, and again, the low for 31 is the orange, and then 6-1 basically double bottomed there and helped it leave. But look where that low is on this day. If you look, we had the volume point of control here, right? And then the if you look back, the blue is volume area low, and or sorry, value area low and value area high. And so we pulled back into the value area where where the market spent most of the time, and put in most of the volume, 70%, and it was unable to get to the low, right? It pulled back in there, and then it left through the POC and through the value area high, which was on the high of the day. In other words, it pulled back into the value area, and that fair value on 526, that area where like nobody really cares about whether or not you're on the top or the bottom of this at that time, because that's all fair value. What they care about is it above fair value? Is it too expensive? Or is it below fair value? Is it too cheap? Right? Or sorry, down below blue. This would be considered too cheap, and above blue would be considered too expensive based on this profile. So on this day, all these prices can basically be seen as the same price. It's just within fair value and probably not worth fighting over. And so when you pull back, you can see that we were unable to get to the mid, that's that green, of the day, right? And it was a trend day, and there were these single prints left behind, particularly this one, and then maybe this one underneath the value area low. The fact that we didn't get in there and retest those immediately is generally pretty bullish. So the fact that buyers showed up inside the value area, they didn't wait for cheaper prices. They immediately started buying right at this like low volume node basically, but that's just of the intraday, but it's inside of the value area. So it shouldn't be that significant unless there are sellers trapped from lower. So the sellers who sold lower than this down here and got gapped overnight are still covering. That's what created the single prints, and price tried to re-auction them and was unable to repair them on the first try because there was such pressure from the sellers trying to exit, and they exit by buying. And then also anybody who missed, like let's say they were watching here and they were like, wow, I really want to be long, but I'll wait for for a better price, right? And then the next day it goes lower, and like they don't buy for one reason or another. I guess they would really think that they want to be buyers here, but they don't buy. That's the important part. They were obviously bullish if they were looking for a value buy, and they wanted to buy, but they didn't. Then it gapped up, right? And suddenly, as it started to move higher, those guys are realizing I'm not going to get the chance to buy down there again. If I want to be bullish, I need to get in right now. It's FOMO. It's just FOMO at different time frames. So this is created by FOMO, and this is created by FOMO. The fact that we were unable to repair that area, even though there was very little auctioning there, it just rode right through it with very low volume and little interest. There was no one wanting to sell. And when we came back, we ran out of energy to the sell side. They put in the, see, on the first day, it was a balance day with like an asymmetry. And usually you would expect it to come up, tap that asymmetry, and then reverse if it was bearish. But in this case, they put in excess down here in the morning. But, well, really it isn't, because the previous day, it basically came right to that low. So it's not excess. It's just single print. This is another one of those situations where single prints look like excess until you look to the left and you realize, oh, they just like ran into an iceberg, basically. Someone had so many buys down there on the order book that they wouldn't let it go any lower, and everyone just chased because they realized this pullback was done. So when you see that, like, don't be short, first of all, but also realize that once this like FOMO wave is done and we come back to that location, what we should expect, if this was created by FOMO and stuck shorts, when it comes back into that area, those guys will be done, right? Because it capitulated. Look, it got over this excess, this single prints. It got over it, hitting all those stops, all the liquidity that's basically sitting up there where people are willing to do a trade because they have to protect themselves. They're getting out of a short and perhaps into a long to hedge a short, or it doesn't matter. One way or another, there's potential trades to be done up here as soon as price gets up there. But for price to get up there, we needed to pull back a little bit. They tried to pull back, what I call refueling. They ran into sellers from before trying to exit 2 days in a row, and it lifted, taking that liquidity. That's just the way markets work on every single time frame. That is fractal. So if you do not understand that process of one side gets stuck, the other side has all the control, they push, then they feign a little weakness to refuel. Everybody who was bearish now pushes to sell, and everyone who's nervous or who bought too late gets stopped out. That's very important that happens. And then eventually you have evidence that the higher time frame is short and they're not getting anything for their work. So they're going to cover, and where are they going to go? Up to this liquidity that's waiting to be hit, because the market, that's its job. It has to go fill orders. And if everybody knows that there's buy orders sitting up here for shorts to exit and for breakout buyers to enter, well, then that's probably where it's going to go. But it can't do that until it stops out the small time frame, or the weak hands, right? The people with very tight stops that bought up here for continuation, put their stop at the low. They need to get stopped out, because once we find the low and wherever sellers stop selling, someone needs to be left over to push this back up, and then we expect them to chase when it breaks through their original entry. So you have like a lot of things working at once, but the idea is you were all buyers, right? The sellers became buyers. Everyone who is naturally bullish are buyers. And then all of a sudden you also had breakout buyers, very small time frame, weak hand buyers getting in up here. They ran out of fuel. There was no one left to buy. And so the result is they're going to pull back until they find a pressure point. And to do that, somebody needs to lose because it's a zero-sum game. So someone needs to get stopped out always on some time frame. It must happen. And then the higher time frame needs to quit, right? The higher time frame sellers need to run out of energy. And the easiest place to see that happen is after the stop out. So once they stop this out, right, the buyers buy there, they put their stop here, they get stopped out. We want to see what happens now, right? So we get this area becomes very important, which is why I have the orange line on it, just because of its location. Well, right there we find the sellers have now become buyers. There's no more sellers below, potentially, because someone's just standing in their way. And as soon as the market starts to lift, everybody follows through. You can see we get a bunch of volume come in right over these highs. That should make a ton of sense. They keep going for another day, putting a bunch of volume up above these guys. That should make a lot of sense. So they just keep stopping out the shorts and collecting long breakout traders. And the result of this, and like I said, this is fractal, so this applies to every time frame. What you're doing when you get these squeezes is you're transferring money from longer time frame traders to shorter time frame traders. You've got the longer time frame sellers, right, who got stuck and put their stop way up here for some reason, right? Or maybe most likely like here. And then the result is you get breakout buyers, which are short term, coming in and buying from them, right? They had short, they were short, so they had sold, and now they have to buy to exit. And so they're buying, and then the breakout buyers are buying as well. So you're transferring money from the long term to the short term, right? And you get the squeeze. Now, what happens here on the pullback? On the pullback, we're stopping out the short-term traders, refueling the long-term buyers now. And eventually, we get to the point where the long-term sellers and the short-term sellers, whoever shorted the hole down here, run into a pressure point, and they don't want to lose any more money, and they decide to become buyers. And then that brings out short-term buying, right? And then it breaks through their stops for those of them who didn't exit, forcing them, those longer-term and shorter-term sellers, to exit. And how do they exit? They buy, right? And then you get breakout buyers. And so you can ask yourself, who's been recently in control? Is this a market that's being controlled by long-term positions, or is this a market that's being controlled by the shorter-term positions at this moment, like shifting, right? Do you have more new short-term traders? Do you have evidence of that, or do you have evidence that there's that there needs to be more short-term traders to move the market? Because if you have reason to believe that there are too many short-term traders in the market, like here, you don't want to join that side. Even though it's bullish, when you get heavy with short-term traders, those short-term traders have very weak hands, and it's very likely that the market's going to come back and swing underneath their stop. Now, thankfully, if you're the reason why we say trade with the trend is that you can be wrong about this move, but as long as you're right about this move, like quote unquote, eventually you'll win, right? So you can kind of be like, you can time it wrong and buy like this day. And as long as your stop is down here, you might have like gotten a little lucky that this held. But the chances of getting lucky are higher if you're aligned with the higher time frame traders, right? There's enough stuck money in shorts that they are forced to hand over their money to you as a short-term trader if the market just doesn't go lower. It doesn't have to go up for them to be under pressure. For you, if you're a momentum trader, you could do what most people do it and just buy the breakout and put your stop here and be a weak hand and take big leverage and make a lot of money right here. That's fine. But if instead you want to buy dips, if you will, the reason that works when the higher time frame is bullish is even though you timed it wrong and you might not have had any evidence really that the sellers here didn't have any enough energy to overtake all of this. Like sometimes this does just totally fill, right? No one knows whether or not that's going to happen, but the likelihood that the higher time frame will come and save you like this is like exponentially higher when you're trading with a higher time frame trend. So if you try to do that in reverse, if it is bearish and you try to buy the dips, the chances that you can just hold and eventually like it'll turn around, it just doesn't make sense because there's no one stuck short to hold the market up. And if the market doesn't go up, all the short-term traders like you are going to get pressured to get out of the market. They're going to get stopped out. And because there's no higher time frame buyers, the market can literally just hold still and expire the calls. And as a result, you're going to run out of fuel anyway. Usually it's the opposite. Usually it's bullish and the puts just expire and that keeps the market floating, right? But that all changes when it's bearish. So it's really important to watch for levels that like this, where we know that this is like unnatural, right? Those poor lows and poor highs are unnatural. They don't happen because of price discovery. It's just the transfer of money from the short term or from the long term to the short term, and it's proof basically, or evidence, I guess. Proof is a little bit heavy, but it's evidence that the higher time frame shorts are stuck, and you don't want to be short when you see that, even though we know it's unnatural. And that is very hard for a lot of people to wrap their mind around, that like we know, we call it a poor low, right? And we know that eventually they get swept up or repaired, that there's liquidity here, and the market, like I said up here, naturally wants to come take that liquidity. That's still true, but when it doesn't, that's evidence that it's not bearish. And if it hasn't been bearish recently, this move is going to be explosive. And so as a day trader, we want to position ourselves not here, right, where there's a lot of unknown, where everybody who just bought, like literally just got stopped out, but there's no sign of any energy to the upside, you don't just want to buy dips because, especially if you're doing it with leverage, right? You need to know where to put your stop. This orange line is only there because of that low. You wouldn't know that that's where it's going to stop. You could guess the mid, but it's not like always going to hold. Sometimes it does and sometimes it doesn't. But when it does, and then the next day it does again, like, okay, now you can buy, right? And so that's why you get these big moves. And if you look like here, there's single prints that were not retraced right away. See that? Those white lines are a chunk of single prints. So look what happens, how everything changes once they get filled. Okay, they put in time and probably volume as well underneath those single prints, right? They get repaired, which is what we kind of expect to happen here too, and here, right? All of that would be normal in balance, just to come back, fill the prints, see if there's buyers down there or if not. And if there's only sellers, then it's going to go lower. But here they went through the singles, and if you look, they found no more sellers. See that? Yeah, and that's yesterday, right? Now, I kind of got on a tangent with this, but the point is you need to be aware of your locations from the profile, because if you just look to the left on that important day with the double bottom, the poor low, if you look at that volume point of control and market profile point of control, it's exactly where we bounced yesterday on the regular time frame, the regular trading hours. That's not natural, right? But if it happens and if it holds when they have a chance to come back to it, it's not bearish. It can't be. It can't be. Not on our time frame as day traders. Can it be bearish from up here? Yeah, absolutely. But the thing is, for it to work, your bearish bet, you need to be able to stop out some bears, right? Just like here, to get the buying to happen again, we needed to stop out those buyers that bought too late, right? They needed to get stopped out here underneath the low. And then once they found a low point and it confirmed, it can go higher. So here, if you're bearish, and like I said, I see it, right? I see that there's like a big area up here. And if you measure the volume profile of that, oh, they're not going to let me do it. Weird. I guess I can't. I can do it on the other one, but if I measured a volume profile of that, I would see that we got under that, right? We developed volume under the consolidation zone. That's usually bearish. That's what bearish moves look like. But because we got a bounce right off that VPOC and they didn't break through it and repair it like you'd expect, whoever was short before is probably still stuck for the moment. So to be bearish again, what we really need to see is we need to see sellers get stopped out and then a roll down. So that could be here, right? These single prints might create a move like this that stops out sellers, or it could be here, or it could be here. We don't know, right? You're not allowed to know that, but we can know where it'll likely be and where it likely won't be. So if you're trading to today, and this is what you have, this is the information from yesterday, my first thought this morning was, look, overnight, we got under here and we're opening above it. If we don't break under that, it's not bearish. No question. I don't care what this looks like. It's not bearish on my time frame until we trap until we stop out some sellers. We're going to need to squeeze and get over some clear level where people would put their stops if they sold down here. Whoever sold yesterday is stuck, and that's all that matters. On the bigger time frame, yeah, there's probably buyers stuck too, but it don't matter if we can't go lower, right? Unless you want to leave your stop up here, you can't be bearish. And on a day time frame, you can't put your stop up there because that was a huge range yesterday, right? So our first thought should be we're going to come back to wherever most of the volume was put in here. So we can look at the volume areas, right? And see that low, the blue? That is a very natural target right there. If that rejects, we could be bearish. It could also get up here. If this or this, right, the VPOC of the highest day, if that rejects, maybe we could get a reversal or an attempted reversal. But it would probably take hitting it, rejecting, and then shooting over it on another day and rejecting again. So it could take 2 or 3 days to roll that, to make that work, right? And so it doesn't mean we can't short. It just means we can't be bearish, right? There are times when mean reversion makes sense, like in a balance market, but we're not bearish on the daily time frame in the morning when we put in a low that was mechanical like this and we traded below it but opened above it. And then what I'm going to show you is in the morning, it was crystal clear that we weren't going lower. I'll show you where. So here's that low from yesterday, right? This is the 15 tick, back to the 15 tick. So here's overnight, right? There's a low. And then we rip back to the low of yesterday, the regular trading hours low at London, okay? We bounce off of it. We go high, right, through this level. We go higher still. And before the market, we pull back. They try to test it. Instead, it bounces off of a voodoo range level. Then it goes through it. Here's the chance for it to be bearish. If it's bearish, an hour before the open, right, with the what was it, unemployment today, that was the opportunity to be bearish and reject yesterday's low and repair it with a lot of volume. But the reaction, I don't care about the fact that unemployment went up and that's bearish. Like, stop thinking about that stuff. Like, that's not our job. If you're a day trader, that shit don't matter. I hate to say it, but it doesn't. It will, but it doesn't matter today. What matters today is what's the reaction and why, right? Like why here? Well, we tried to get out of that level, under that level again. And remember, the overnight low was lower, a lot lower, right? And the number came out at 7:30 and it just, whoop, right? And so, like, I mean, this was their chance to be bearish. We should have rejected there. And especially if you think it's a bearish report, like, there's your opportunity to be bearish and they don't do it. It's not going lower, sorry. So they try to pull back, right, during this. Like, there's some people being like, no, this is bearish. And they go a little higher. You can see the overnight high is put in right there. it made a higher high, but on lower volume compared to this move. And generally, that's going to lead to a pullback. So this level is what they'd be looking for, the sellers, to target, or at least what they should be, because this one was rejected clearly, right? It would be a surprise to reject this, to get under it, I mean. And so they pull back. The market opens at 8:30 where that little line is. They couldn't even reach their target, right? So this is the open. So if you know the big picture, you knew right at 8:30 basically that there's no way this is bearish. Like, I don't care what the report says, I'm not taking bear trades until we get under 14,330 or whatever. Like, if we can't even hit this, like, that should have been easy on a bearish report especially. And like I said, the fact that the yesterday's low is now below us and it was mechanical, meaning like it wasn't natural, it just bounced off of a different day's VPOC, like, that doesn't make any sense unless there are sellers trapped from way back when still. So what happens when higher time frame sellers are trapped? They transfer their money to these short-term bulls and the price goes up, right? So price goes up. Now this level can get tested, and this is where people get confused, I think. Here's the overnight higher low. Here is the regular trading hours low. Okay, so this one appeared to reject, right? They come back and break this, and everybody thinks it's bearish 5 minutes in, right? And they just bounce like a freaking machine right off that low. Like, I don't know what to tell you. Like, they trapped a seller right there, aggressive seller, and they said, see ya. And it's not going back, because this is the second time that that's happened, right? They did it overnight, third technically, and then they did it yesterday at the low. Yesterday's low. Tried, nope, right? And then overnight, yeah, they went under it, right? Collecting a little bit more juice to go higher. They make a higher low. They can't break that. Everyone knows it's bullish on the higher time frame and is basically just looking for an opportunity to exit those sells, to exit those shorts. So every time we dip, we get a buy. Every time we dip, we get a buy. And like I said, sometimes it's just mechanical like this. Sometimes you get 3 bars under it and then it just rips over it. And if that happens, usually you need another higher low to be sure. But the idea here is, big picture, we are not having any success at going lower. So if you can see that, that will help immensely with not fighting the trend. But even if you can't, if you see price action like this, where it comes back and makes like a low that's like right at a level that, you know, people have on their charts, if it leaves that area, like I said, I know that poor highs and lows are likely to eventually be repaired. If they can't do it, like, don't be stubborn about it. Like, it'll happen a different day probably, but for today, our target should be overnight high, right? We should be getting up here for whoever put their stops up there. So I want this, right? And it goes straight there, puts in a high. The pink is opening range high, so you wouldn't have had that here. It just prints for the whole day, so it'll show up. But this one was the overnight high. That one we had. So that's the one I'm targeting. And then they tried to take it back. They reject. They get above it. That's mean, right? And now they finally get the retracement. So these guys, short term, are trapped, right? But big picture, we know overnight, these guys are trapped. Yeah. So the big picture is more important, but the market takes care of new business first. So the first thing that's going to happen is anybody who chased above overnight high, they're going to test them and see how strong they are. Are you planning on holding if we make a lower low? What if we take out the day's low, right? That's what they're trying to do. That's what the market wants. It wants that information to make decisions. So it's going to try to rip down, right? And what we want to do is we want evidence that these guys who bought up there have been stopped out. Okay. And how you see that is with order flow and aligning with location, because thankfully people usually put their stops underneath a visual low. But it's not just getting under it. You have to get under it and actually see that there's a lack, excuse me, there's a lack of sellers after a capitulation is really what you want in the situation. So otherwise, you're just going to get a little retracement and not a reversal. And I can show you how to tell the difference with the algo in a minute. But this came right off of the, like literally almost at the point at the voodoo range level. So those are clearly working. And like I said, that's not necessarily the low, right? But you're gonna get reactions from that, from the high frequency traders. The algos that just watch those levels all week long are going to be like, oh, it reversed. I don't want to be short. And then what did it do? It went above overnight high again, ran out of buyers. Now it's going to stop this one out. Okay. There is what we want to see. That is the capitulation. Boom. Now, even if you didn't know what to look for here, which in this case is this triangle coming under a green bar. But even if you didn't know that, once you see this, where they tried to reverse it, and remember, their target should have been here or below, right? They couldn't reach it. Again, that should have been pretty easy if it's bearish. Because look, if you rejected above overnight high, the natural place to go if you're balanced, overnight low, right? They can't do that. Why not? Because their seller's stuck. Therefore, don't be short and look for longs. Now, the hard part is when you miss this and it goes back to above overnight high, realizing that dips now, like they're more, what's the right word? I don't want to say safe. That's not really right, because that suggests that you can't be stopped, and that's just not true. But they are, I guess, less risky, right, than these. These. After getting up there, seeing the dip, getting up there, seeing the light, like if you're trying to get long here, you're going to have a harder time than if you try to get long after the capitulation. Now, getting back into overnight high again, or above overnight high, now we just basically need a higher low and order flow, aggression. The star is a really good one. It helps if there's a triangle after it. And yeah, I mean, it looks easy, but it's just the same thing, right? So the algo isn't magic. It's just looking at the footprint. So like, if you look right here, if you knew what to look for, let's see. Okay. So there's overnight on the footprint. We pull back. See what happened here? That is buyers giving up and price going high. Right? And then pulls back. See that? There's no sellers. So what's the result? Big buy. Aggressive buyers. You can kind of see it here. You'd see it better on the DOM and the time and sales. But that bar here has like a similar condition, if you will, to this one. And then it's followed through by, after that condition exists, it's followed through by more buy, right? So condition exists, more buy. Now remember, these are volume-based bars. So each one of these bars have 2,000 contracts of volume. In the Renko charts where the signals are, these are range-based. So I'm like shading, 2 bars or 3 bars here, and we can do it here too. There. And on the footprint, it's potentially going to show only 1. Right? But those 2 bars are like inside here, right? And like I said, you can find this information. You won't know what you're looking for exactly unless you know how to read order flow. But anything that algo sees, I can see with my eyes, right? I just have confirmation immediately that that condition exists. Okay, and then you get the rip. Now we're clearly above overnight high, right? So here is overnight high. You can see the dotted line is where most of the contracts are done over time, and that shifts up. So all of a sudden, anybody who sold down here is now officially stuck. And the result is they can't put lower lows in. See how this low brings up this low? And they leave that area. Now that can create balance. Nope, they shift up. Oh, no, it did bring it back. It didn't get enough volume up there to bounce it. But when what I'm trying to say is here, you had no one currently trading at the fair value, basically. So everybody here is buying expensive contracts if all you're looking at is where did most people do their business previously. All these people are buying like at a premium, right? And the yellow or the gold outline is confirming that not only are they buying something expensive, but like they're buying it without any regard for the price. And that's not always bearish or bullish. It's something to watch for, because when you see them continue after those buyers, and if you can't get fair value, so if fair value can't overcome that, then these guys, I mean, the only reason we buy is because we think price is going higher, right? The only reason someone would be willing to buy at a premium is because they thought they could sell at a higher premium. It's buy high and sell higher. That's what they're doing, right? It's confirming that we basically have momentum traders in the market. It's not bullish or bearish, but it does tell me to watch that area because they are very weak hands. They do not hold through big retracements generally. They put their stop basically at a visual low and they say, I'll let it pull back to here, but if it doesn't hold there, I don't want to be in here anymore. And if it doesn't go up, and it just kind of hangs out, they might sell then too. So we can look at where most people were buying, what the fair value was when those momentum traders came in, and we can say, okay, as long as price stays up here, like here or higher, it can touch here. It just can't like go a lot lower than that and put in aggressive traders and volume underneath it. They're going to probably hold and expect higher. But what we see is fair value over time actually shifts up, meaning, in other words, there are more buyers up here than there were back here, because it's just an average basically, and it's saying that average has increased. It's kind of like when you're say you're like trying to buy a car, right, or a house, and you're like, oh, that's a pretty good price, but it's a little expensive. What happens when you don't buy and price increases? What usually happens? Usually the buyers who decided not to buy here, who decided not to buy there, if price comes back to their initial price where they said it's too expensive, but then price went higher, when it goes back to that first price, they might change their minds and decide, you know what? I've seen what price can do and how fast it can move. Maybe I should just buy it, right? Because what if it goes up again? It's FOMO. And so what we can watch for when it shifts up is we can see, how do these buyers respond to that? And do I now have more buyers lining up down here than I did when price was up here? So sometimes you only know that if it actually dips, but eventually it usually does. And when it doesn't, well, that gives you even more information, because it just says no one even got a chance to buy it down here because they just refuse to sell it, right? So there's certainly no reason to sell until I see them not buy this level. That's what I'm trying to say. And then we shifted up. These guys did not get the gold. See that? They moved away, but they did not get the gold markers, right? And then price came right back to the fair value. Whereas here, gold couldn't come back to the fair value. Right? Now, that it doesn't always work that way, but if it does come back to the fair value of where gold was, we should expect the gold bar, we should expect that fair value to hold. Not like a brick wall, but in general. That is what trending markets generally look like. It's people buying at a premium, them potentially getting kicked out of the position if they bought too high, but whenever price pulls back to what the fair value was there, where there weren't that many buyers while it was pulling back, suddenly there's buyers there now, right? Because the people caught short are worried that it's going to go higher again. So until that stops happening, we don't want to be selling, okay? So here again, fair value, right? We're looking for gold bars, and we're just not getting any. So we're going up, we're pulling back to fair value. We're going up higher. We haven't had any gold bars. We're probably going back to fair value. So you don't want to buy this at all. But if you got a pullback and they bounce off that fair value like this, usually it will have a blue dot. That'll come in a minute. So this time, we went through the current fair value, and we returned to this one. There were no gold up here. So no confirmed premium buyers, or buyers at a premium, right? Overpaying. And we came back to this fair value, and what happened? No more sellers, right? Bullish. No question about it. And then if you didn't know that until here, you can just buy the triangle. Otherwise, you can wait for blue dots that have algo signals, preferably. Signs of aggression. Okay, now this one, I missed this. Gold bar. Right? Here's fair value when it's a gold bar. Price comes back immediately to that level, right? And they try to buy, and it can't go any higher. How are these guys feeling now? Not good, right? If this, well, here, they should be pretty uncomfortable here because they know they overpaid, and now price is going below the fair value, or the agreed upon fair value that everyone agreed upon when they overpaid. So if it's bearish, this will be the end. Sometimes, on the other hand, when you expect everyone to sell on this time frame, a higher time frame is just too stuck to sell. And what you'll usually see is purple bars at the end, especially two of them, but even just one, and then just a rocket. And like I said, if you're looking at multiple time frames, you can anticipate this a little bit. Oh, did I go too far? Where was I? I should have made note of the time. Here. It is 9:39. 9:39. So on the higher time frame here, it's 67 tick. It's just not even a little bearish, right? And what you end up getting is a gold bar because they are overpaying and they know it, right? And so if you see that the higher time frame, like we talked about before, is this bullish, where like it just goes away from fair value, tries to come back to fair value, and instead it just puts in a blue dot and goes higher, right? That, even though there's no goal, that's really bullish. And it's going to be hard to break any of these lows until that changes. So here, they put in this low on the higher time frame. On the smaller time frame, it's pretty close to fair value. It doesn't look like a big dip, right? You'd usually think that those dips get tested. But in this case, they rocket. And now they just can't get back there. So when it's a trend day, you can't expect normal rotations. You have to accept that the higher time frame is going to dictate the smaller time frame, and you might miss your entry if you're waiting for that pullback that stops out a short-term buyer. Because just like we saw on the daily chart, sometimes when higher time frames are bullish, the shorter time frame traders with the trend just get away with like doing things at the wrong time, right? They're not getting under these lows. So if you look at the little flags, those are the swing lows and highs. They're identified like 3 bars later, so I don't have them live. But once you identify them, in a balanced market, you'd expect liquidity to be sitting back there, right? And normally you'd want to go collect that liquidity. Well, over and over again, we're not able to get there. And that is your clear sign that you should not be shorting. So, whereas on the other side, if you did the exact same thing for the shorts, collect liquidity, pull back. I'll do this one. Collect liquidity, pull back, right? Every time, because they don't have the higher time frame supporting them. It's just the shorter time frame traders doing what they can to mean revert against these big heavy hitters. Here's another low, can't break it. Here's another low. Still doesn't break this one. You think this one's going to get broken? Probably. You think this one will? Probably not. Not right away. Gets broken, comes back in. Okay, now look at the differential here. They made a huge move up, breaking this high, right? They did put in more volume, but most of the volume is here in these last two bars. But then they pulled back and immediately reversed. Why did they do that? Because fair value adjusted up, right? We went through it. We went back through it. It adjusted up. Why? Because there's a lot of volume in here. And then normally they're going to come back, test fair value. And now there's more buyers here than there were when we were here. Because here, some people were willing to pay more than fair value, but most aren't. And so when it comes back, they know where it's been, and they're like, yeah, I'm not letting this go any lower. Right? Now this time, because this differential is so big, because this difference here is so big. In other words, because the distance between the gold bar and the dotted line is so small, it's really hard to hold that low. Really hard. And so what you end up getting is they take this liquidity, they put in a new swing high, they put in a tight rotation here, and then they take it out, like in a balance market. But the only reason that could happen is because this was so tight. And we're butting up against a previous day's point of control, which is also important because location matters on the higher time frame. So we came to that point of control. We got over that previous day's low from like, or actually no, this is that day's high, I believe. The let me check. Oops, not that. Profile. Yeah, it's 531's high. So we got over that. We ran into the VPOC, or the, yeah, VPOC of what day? Back here, 5:30. We ran into that VPOC, which was important, like I said, because it was a trend day and doesn't matter. We already talked about it. They rejected, right? And this little move right here occurred only because fair value is so high compared to the previous low. And they kind of, they show up here because they're afraid that it's going to go higher, right? But this time they run into resistance and they break through it. Okay, where do you think price is going to go? We have poor lows back here. We haven't broken a swing low basically since the low of the day, as far as I can tell. So what would be very natural would be to come back, take the stops from all the people who bought up here, because they probably put it down here somewhere, and then see if there's sellers or buyers waiting there. They can't even get there, right? What we should expect is a test down here now, and they can't do it. It's that bullish that it just won't pull back. And again, we can see that on the higher time frame. It's just rocketing. They can't put a single bar that's bearish underneath the previous days or the previous bar's VPOC, the yellow line. It just can't get under it, right? And so it just goes, just like it did here, right? Just takes off. So we were here. Okay, takes off. Now this is going to squeeze because people got involved short here because they were sure that was high of day. It makes sense. It's mechanical, but we're not going to stop at mechanical places because this is it's a squeeze. So We go through it. It takes us some chopping. Note we've got premium buyers, right? Or what I call repricing. Where was fair value when those guys came in? It was like right in their wick. That's very unusual. I don't see that very often. But one way or another, it's right there at like the voodoo range level, 32. So if price comes back to 32, it should probably bounce the first try. Okay, now we get what we usually see. Gold above fair value. Where's fair value? Like 41. So as long as we hold 41, it's probably still bullish. What happens? Fair value shifts up because they put a bunch of volume at the high. They get more premium buyers and repricing, and that causes fair value to shift up. Now fair value is like 59. That should get tested eventually. And if it does, we should expect a bounce, unless it's bearish. Okay, now we put in more. And this is what happens sometimes. It just squeezes, right? And we know why it happened. It happened because of this pullback. That pullback got enough people bearish that rather than buy dips, they tried to sell. And now they know they're wrong. And anyone who is stubbornly refusing to cover through all these higher lows is now panicking. Right? And that's what that says when you have yellow bars or gold bars, and then it goes up and value shifts up, and they can't come back and test it like that. Like that's not normal. See that? And then we put another one without coming back here. Not normal. Okay. Bunch of people buy up here. Then we get one guy all by himself. We got him here too. That isn't gold. That is someone chasing. If you beat the chaser, there's a good chance that you get a pullback. So this guy is a chaser. And it doesn't matter if it's a short covering or a buyer entering. It's people buying up there way too late. And that doesn't matter, as you can see here, as long as you don't close under it. But what you'll see is when you do get volume under it, you get a pullback. And that pullback is going to go back to the last one who chased, or a pivot, which looks like this, but there's just no marker on there. But that's where you would expect it. Otherwise, it's going to go to fair value, right here, or the previous fair value is also possible. So here it comes back to fair value, puts in a purple bar, bullish. Goes through fair value. Where is it probably headed now? Probably here to that fair value. The problem is we did this over and over and over again. So really, this all started, the repricing here. So we could be coming back to 40. Is what you'd think. Instead, these buyers appear to capitulate there. And even though we got under fair value, they bought it up with, some, here, I'll show you. The volume comes in when this shifts. So here is all the volume. So someone bought heavily here, even though we made a lower low. And while we made that lower low, there wasn't much volume here because you can see the yellow line never got underneath this low. So you might not know immediately that it's time to buy, but for sure, once they put in another swing and it goes higher, if it was bearish, we have a trap buyer, a low, a lower low, a low, or lower high, and a lower low. It doesn't get any more bearish than that on this time frame, right? But the problem is, for bears, is there's all of this back here where people were trying to sell that now they just don't want to risk it. And so, like I said in the beginning, if these gold bars can't be retraced, if we can't get under them, it's not bearish. So here or here, if those hold, the reason for that is because the ones who saw it initially, who were like, wow, look, people are buying even though it's way too expensive, it went up and it all came back to that price, and they're like, maybe this is a good price. So it tries to go higher. Now, because this is the first lower low, we should be on guard for some consolidation. So we want to make sure this high gets tested, and then it should sell from there, right? Like that. If it's consolidating, if it's balanced. And then our target should be some of these lows. And then we should expect that buyers show up underneath them, right? When we can't do that, when this one can't get under here, this one can't get under here, even though we take liquidity, they can't get under here, it's not bearish. It's going to squeeze again. And so the right way to do this, in my opinion, is when higher time frame has just been squeezing and you have the very first pullback here with the lower low on this tiny time frame, don't be selling it, but look to be sure that you're not going to beat it. And then watch what happens at the highs, because that's probably your target for your initial exit, and see if you can get a setup where you can put your stop down here and get long in there somewhere. Like this or this. I would have liked this to get taken, but it just couldn't do it, right? And so once you see that over and over again, like now this is when breakout buying actually makes sense, because you know that it's bullish. It's just a matter of getting in at a place where you can manage risk. But that's the kind of breakout you might want to buy. But then if they turn it, especially right at a voodoo range level or some other mechanical level, assume that they're going to come back and break some of these. Because these guys all got a free lunch. They just had to hold, right? Anybody who bought in there, like, didn't even have any pressure at all. So they're going to get retraced in case they were very weak hands. Hold on real quick. Okay. So it makes sense that they'd come back through here. And then what we want to watch is, where do they bounce? Well, they bounced right at this one. Couldn't even get under it. Just bounce, right? It might not be ready yet. That's a poor low, technically. But sure doesn't look very bearish. Okay, so here's where we want to watch. What do they do under this? And what do they do on top of this? Because this looks like consolidation, right? And what do? They bounce, and they give us a triangle without getting underneath this low. It's probably not bearish, is my thinking. Another one, another dot, right? And then they break this, and they can't get back down. And if you look at fair value, we got up here with no gold bars, so the likelihood that we're coming back here is very high. We do that. We swing a little lower. They come back to that level. Re-auction a couple times. And then head up here. So now we're looking for gold bars right there. And now, can we get to fair value where that gold bar was? We already got under it. That is a short. It's not a gold bar like this, where it's way separated from fair value, where you just expect it to come back and test in there and then go. In this case, I see what it did. In this case, first of all, it's all by itself at the top, at the highs, after a big squeeze and a consolidation where it looked like, once again, buyers were getting a free lunch, not getting any of these stopped out. And then you get someone capitulating, but look at where it showed up. Not where you'd think breakout buyers should be early, right? They were repricing, overpaying not at a new high, but back in here, right? They were front running is what they were doing. They assume it's going to break that high, and they are overpaying over time because most people got involved back here, but they are doing so in a really dangerous way because they're putting enough volume up there that it's shifting fair value higher, meaning they have no support to rely on. And if it doesn't go straight up, there's nothing for them to hold on to because fair value is right here. So it's not a short yet, because as we saw over here, even though it's rare, so that's why I pointed it out, because I actually took this trade, but this is dangerous. If you give that up, it's over. So the squeeze anyway. So you have to watch for that. And I saw it and posted about it here. Okay, so once this was here, we know that like these guys are getting way too anxious, and it's probably almost done basically, or already over. What you really want to do is find a dot to the left of that and watch for them to get volume underneath that, because sometimes the higher time frame is just so strong that you just don't get any traction. It is an aggressive sell to sell right here. It's not wrong. It's just aggressive. But the fact that we have a dot, especially on a small bar, right to the left of us, meaning that we don't have to put our entry very far below, like if it had a big wick, we can just wait and say, okay, this looks bearish for the moment, but we didn't take the liquidity. And they've been taking these over and over and over again. Maybe they did by a point, but one way or another, it's a little bit aggressive if you don't wait for the yellow line to drop underneath the dot. And it doesn't. They just give him another shot. Now this guy comes in overpaying again, and fair value's there, right? This one does the same thing. And then they beat him, and they come right back to fair value, which is normal. Now, the only reason that this is so dangerous is because of this guy and this. So you could, what I did, I aggressively sold some, and then I waited for the 40 tick to confirm. 40 tick, that's not it. I waited for the 40 tick to confirm, if this is the one I'm thinking of. But once you get under this, oh, it still hasn't happened. Purple. Yeah. So technically, once you get over underneath this bar with the yellow line, you know it's a pullback. Technically as well, a dot that doesn't get immediately beat is probably good too. So for sure by here, you know it's bearish. And where's it going? At least back to fair value back here where it shifted from before the little squeeze started, but probably taking out one of these because that's just where markets like to go. So they come behind the first one, they try to get volume down there, and a buyer responds. And then we get the ultimate sell signal. And I shared this one too. So when you have a day like this, where you're just, one side is just brutalizing the other side, when you get a partial signal, so the buy signal in this situation is find an established low, get a ring, a blue ring, and then follow it up with a triangle. The reason you need to follow it with a triangle is if you get it without it, and then you get an X, it's an extremely strong bear continuation trade. It's specifically after a big drop like this. Additionally, the star followed by an X is also super strong, bearish. So I shorted more there. Got a little nervous for a minute. Since it was purple, you could wait for the next dot, but this was purple too. But all of this purple made me nervous. I was like, we're probably going to retrace this, but this is pretty bearish for the moment. So I had targets down here and then lower, thinking there's way too many short-term buyers in here and they're going to like sweep some out. But remember, I know the higher time frame is actually bullish. So the moment we see this change character, we want to flip. So it was relatively easy to hold once that happened. But then they got to the voodoo range level. So I'd taken some profits already and stuff like that. But they got to the voodoo range level and I had to take some more profits because I saw them bounce. And I'm like, wow, they didn't even take out this low, which I really thought they would because it was a lower low. So I was like, well, if they can't take out the lower low, it's not bearish, right? So instead, they just took out these. And that's hard, a difficult judgment of whether or not this will continue. But I'll show you what they did this time, which happens. They pulled back right into the purple bars, which again is normal. And if you, I've shown in my other videos that if you have purple bars that aren't retraced like that, you should expect them to be retraced in the future. But if they can't, it's bearish. And then vice versa for pink. So I was able to hold one contract and my target was the next voodoo range level. I assumed this was going to get broken. And it did. And then, like I said, I wanted 32 was my primary target, was get one more voodoo range level lower. So they got a green bar, which we're going to talk about. And then it's very normal to test underneath these green bars. So no worries here. They test under it. Now, the only thing I can't happen as a seller is I can't have this break. Because normally a bullish market will get a green bar and then you're going to get under the green bar. But before you get the yellow line under the green bar on a bearish bar that's not purple, you'll get a bounce. That would be normal. Here, we got another bearish bar that's not purple with the yellow line below it. So from my point of view, it is bearish unless we take that high. And we keep going. We run into the previous days or the 530 VPOC and they bounce with another green bar. And again, the rule stays the same. If I get under this and then bounce back and I put a triangle in after that, it's a pretty good long. They bounce under it with a purple, and then they destroy it with bearish. So now that setup, that buy setup is invalidated, and now I'm only bullish if they break that swing high. I get to my target, I get another green bar, great place to exit. If I get under that with a purple bar, or if I can't get the yellow under it on a bear bar, and then it comes back, then I know it's probably bullish. They got under it with a bear bar. It's still bearish, unless we break that. It's got to be a green outline for that to work. Okay, green outline bar, right? If they get under that, but they can't get the VPOC under it on a non-purple bar, it's bullish. And then I need to buy a triangle. Well, here, they just lifted. And this was that previous day's high, I think, or low. And they just didn't reach it. And so I had already hit my target, but I was curious how far it was going to go. You never know how far they're going to go. But what I wanted was to test this and then come back up and give me a triangle up, and I could be long. But what I realized is if it gets to here and it gets volume above that on a bull bar, it's definitely bullish. Here, they got volume above it and tried to sell. So that's a defense. We should expect them to take this low if it's bearish. But instead, they reverse, and they reverse with a dot. So now if they get a triangle, that's a long. And it works. So you could do this one too. Dot, triangle, or star, triangle up. I know you're at the top of the channel and it looks kind of dangerous, but if it's bearish, you don't get the dot here. You get blue dot up, star down, rip down. So when they immediately attack these stars that are meant to defend a level and you get a dot, you should wait one more bar to decide because they can technically disappear for a bar. But once I've seen this triangle up, anywhere in here is a long in the future. I don't have to do it immediately, but any of this is buyable. Now, green, if I get under green and then it bounces back up again, now if I get a triangle up, that's bullish. And I don't. And so in this case, that long didn't go very far. But it didn't stop. So in this case, you need the VPOC to get underneath the low. And it did not. Price did. You can't just put your stop right there. You need to put your stop like basically below these if you're going to trade this way, like a momentum trader. At least behind the pink, and definitely behind fair value, which is the dotted line. So you can't put your stop here or above because that's probably where they're going. So it's got to go below that. Assuming it goes below that, if it's bullish, even if you buy it up here, it's probably going to hold. If you don't want to buy this because it's the top of the channel, totally cool with that. Wait until they pull to the back of the channel and you get another dot there. This is the more aggressive, dangerous buy because it's at the top of the channel. This is the ideal buy because we touch the back of the channel. So then it goes. And it squeezes, right? I mean, there's not a lot to explain in there. But here's another one where we have a level. If it's bearish, they defend this and it goes lower, at least back to fair value. Instead, when you get a blue dot and they can't get the yellow line any lower, you got to get the triangle up to confirm, but that's bullish. And so now again, any opportunity to do business in there makes sense, but you'd prefer to do it at the bottom of the channel, so a little later. But sometimes you don't get that chance. Here you kind of did, right there. So it came back to the channel, gave triangle up. Oh, that one stops. Or did it? It's got to be based on where fair value is here. Fair value is, oh, above you. Oh, interesting. So it's fair value. I'm not actually sure what to do about that. I wonder if because fair value is up here, you need to act quickly. Because look, it got shifted down. So it's this. That's where fair value was when it triggered the first time. And then, like I said, that kind of makes sense. Oh, but, well. See the problem here? Gold bars. Fair value on gold bars usually gets tested. And you can't get under that. But you wouldn't have known that you got under that here. Right? So now I need to beat this. And I need to hold this, more or less. Ah, there it is. That should be better. Yeah, I know that's confusing. Here, let me re-explain this the right way. Okay, so when the signal, regardless of what it is in general, most of them, if it's a momentum trade, right? If you're trading with the trend and not a reversal, you're looking for the point where it triggers here, triangle up, right? That is fair value at that moment. It's normal to come back there and test it, even if it's still bullish. So if you're not comfortable up here, leaving your stop there, you need to get out of the trade because price is probably coming back there. So your stop in this case needs to go like here, underneath that dot, that line. And if you get the yellow line underneath this white line, you can just exit the trade. So here, if you're writing this and you're up here and you're like trading an evaluation for Apex and you got in at 86 and now it's 02, right? Like you haven't hit 20 points, but your fair value is all the way back to 80. So if it rolls back on you, you're going to give back 20 points, even though you haven't made 20 points. And so as soon as you see a sign of aggression to the sell side, if you know that's where price is probably going, you might as well just exit for a 10-point gain. Even though a lot of times it's going to chop around in here, test this and run. You don't want to risk it because it's better off getting out and then waiting for it to test it or try to test it and then re-trigger, which is here. Because now you can get in there since it didn't break your fair value with the VPOC. Now you can get in there with a very tight stop, right? Because fair value is right there. So now you can make the other 20 points or 10 points or whatever without any fuss. So it's a little bit more work because you're getting in here, out here for like a small gain, and then back in here, stop here, make your money. You just don't know which one's going to run. And when they're not running, you need to not be in. Anything else to show you? I mean, this is just another pullback, but they all kind of look the same after a while. I forget which one I looked at and which one I didn't. I was preparing for the stream somewhere in here, but let's just take a look at this. So that's your entry, right? Diamond, triangle up. It's a little dangerous when they're both pink, but it's so bullish. It's rarely going to fail. And then plus dot followed by a triangle up above it, or blue dot followed by triangle down below it when it's bearish. Super strong. So your stop belongs down here. And then this one is red, right? So normally you'd expect to come back, take liquidity, and then you could think about selling on a triangle down, which I call, like, I've got, it's, what did I call it? The snatch and grab trade setup, where I wait for the red bar or the green bar. Here, the green one actually triggers here. So green bar, get behind it, right? And then snatch and grab it out of it, because out of his hands, because he bought with the stop here. He got stopped out, and now you get to take it. So it's like a second mouse trade, but specifically with the green and the red. Now, when you get a red and it doesn't stop it out, there's a chance that you're trending down, and what you would normally look for in that situation is a dot that's yellow. And then for the buy, it's a dot that's blue. But if you got the dot and it's followed by a triangle, it's usually pretty good. In this case, this dot got beat by X and a star. Not good. Not bearish. And then you got another dot, and that one didn't create a triangle. And then you got purple, pink. Now, in general, purple followed by pink, and then followed by triangle down, or anything followed by triangle down, is usually bearish. And then pink followed by purple, followed by anything else that then you get triangle up, is usually bullish. So here, seeing purple, pink, I know it's bearish if I go lower and get triangle down. So I can basically get in here and just stop out if I get triangle down. But that only works if it's bullish, because otherwise you're going to get hammered. This is interesting, though, because they did purple, pink, purple. So now you could just wait for triangle up, and that's bullish. Right there. So now this is your conservative entry. This is your aggressive entry. And you get the squeeze. And then that's right now. So here, red bar, we haven't come back yet. So if we get a yellow dot followed by triangle down in the future, it's possibly a sell. Otherwise, we want to wait for us to get up there. Let me see if I can find another pink purple or purple pink. So I can, here, purple, pink. The next triangle down should be a scalp to the downside. Triangle down, goes lower. Not much because of the location, but it works. Find another one. Purple, purple. They don't show up all that often. Here we go. Purple, pink, right? And then, yeah, so triangle down. It's probably bearish. It's got to be in that area and preferably lower. But that kind of works. Technically, I suppose you could do this, but I don't think you want to take out the purple bar. I'm not sure about that one. If it's not relatively soon, I'm not sure. If it's the location or just sequentially, the next triangle. Okay, pink, purple, triangle up. That's your long. Stop goes down here. Pink, purple, usually triangle up. See, that seems to work. I don't know. Maybe it doesn't matter where it is. I'd certainly think if you're trading with the trend, that would be okay. Purple, pink, the next triangle down. Stop goes up here. You're okay. Purple, pink, or pink, purple, dyslexic, sorry. The next triangle up. And it's just a scalp, but do that a couple times with 2 contracts and you're having a good day. Pink, purple, triangle up. Pink, purple, triangle up. That one stops. Oh, you had double purple. I wonder, oh, here you did too. Why did this one stop? Let's see. Purple, pink, triangle down stops. That one stopped. And then pink, purple, triangle up stops. So 2 in a row stopped there. And I'm wondering why. This one was going counter trend during a situation where you've got fair value right below you. So that's your expectancy. Not a very good trade. But didn't do anything. Oh, and it did have double pink. Interesting. And then here, double purple, pink, purple, and then you run into that. That's got to be it. So here, you have double purple, and so this is not always going to work, but it does because it's bullish. I bet the ones that usually do work do not have double pink, double purple. So like here, it's okay because we got it beyond it. Purple, pink. Oh, it's the wrong way anyway. We would need triangle down. But this double purple, purple, if it was pink, purple, purple, you would expect triangle up to run into problems. And it does. It's just that they attack it anyway because you're at the low and they're all stuck short. I'm okay with it working when I don't expect it to work, but I want to know why if I can. Sometimes you can't. I don't think I'm missing anything, but I might. Pink, purple, triangle up. This is double purple. Does this act as resistance? Boom. Don't take those. That's easy enough. I didn't know that until just now. And that's why I do these. Like here, purple, pink, no double pink. So triangle down. Does it work up here? Oh, you didn't get one. Triangle down. Worked. That's the first one. Wow. Okay, I'll do a few more and then I'm going to take a break and come back. I haven't eaten anything for like 16 hours. I've been fasting, so I need to take a little breather here in a minute. But I want to show how that snatch and grab setup works and how it works all day. And then there's at least another one I wanted to show and demonstrate. I suppose I'll do that now because I'm just not finding much of these. These are, you hear purple, pink, triangle down. That's all. That's all it does. Okay, so I'm going to bring it back. And I'm going to remember to put the screen back on this time and the mic on. But I'm going to take like a 3-minute break here. And then we're going to go back and I'm going to show you how often this snatch and grab worked today. And I'm going to look at yesterday because you can see it in both directions yesterday. Okay, I will be back. Let me try to leave you guys some music or something. Lo-fi hip-hop sounds okay. Sorry for the abruptness there. Let's make sure right away that I go back to live because I forgot to do that before. Oh, there we go. I don't know what I did. Sorry if that was horribly loud. Weird. Okay, it's better now. Apologies to your ears if that was excruciating. I no idea what I did, but it was just showing it like max volume, and so I was like, I don't know. I've got headphones on, I didn't hear anything, but made it look like it was just like clipping constantly, so whatever, fix it. All right, so like I said, I'm going to go right into this and look at the snatch and grab. They're going to work better on the buy side today, but yesterday they were working on the sell side, so I'm going to show you that too. Okay, so we need a green bar. Then we need to either get under it and come back over it, and then get a triangle up. When I say get under it, I mean get a wick under it or get a purple bar under it, not the yellow line on a bare bar. So it's okay if it's, I'll show you as we go. So like here, so here's the yellow bar, green bar. Here's another one. And this does work on all time frames. Okay, so there's two green bars. So we're looking at the lows to determine our trigger. So we get under with a purple bar, still potentially valid. Now we come back up and notice this one also got under with a wick, so totally valid. But we need the triangle up to confirm. Triangle up. That's your long at 50 and your stop at like 41, let's say. Now that one stopped. Right? And sometimes they will, particularly if you're taking them against the trend or from a really long time ago. But that one is an example of one that stopped. Just making sure I didn't miss something. I don't think so. Other than the fact that we have another really strong bear signal here. But for now, we'll say it stopped. And there's probably a way to filter it out. I'm just missing. But here's the next green bar. So now we'd have to get under that, right? And then get back up and triangle up. And we can't get up under. I can't get underneath it. Now, if you get a blue dot before you get underneath it, if it's potentially trending in that direction, you can enter if it's followed by another up bar. Unfortunately, these blue dots can technically disappear if the next bar doesn't show continuation of the volume shift. So it's just the way they're built. So you really need to wait for this one to close before you know that blue dot's going to be there. So that setup is a little bit, it's not as good because your risk reward isn't as good. But the good news is you can put your stop anywhere underneath fair value down here. And you could get in right here on this wick. So, I mean, they still work, but it's like it's a breakout, basically. It confirms a breakout. And you can see this one did not produce a blue dot, and it came underneath it and then got you long here, unfortunately. The only other thing I can think of is if you see where all the volume is before the green line, or before the entry, I guess. Yeah, you can't get over the VPOC. Oh, I know what to do. Fair value. Use the fair value line. Look. So green lifts, fair value. Fair value drops. Your fair value where it lifted after green, that may need to break. and it doesn't. That's actually resistance. And so here, you're already above that. See? Fair value is here. Sorry, it's garbage day in the recyclers. Like, so fair value is here. You're above it already. So that one, but it didn't dip. So here you'd have to get in like here after you got dot, and then preferably triangle up or just at least another bar going in the same direction. And then there were red ones back here. Let me check the red ones. This was during unemployment numbers, so it might not be as good. But here's a red one. Goes down. Fair value's down here, right? That's our primary target if it's beyond us. And then what we really want is for it to come back, collect liquidity, stop them out, and then snatch and grab their short and follow them in. But in this case, it tries to, and then it reverses with the yellow dot. And then the very next bar is bullish, going the other direction, but the dot doesn't disappear, so you could technically still short. But your target's here, fair value, since you're not past it yet. And so that technically works. It's just not much of a target. But the concept works. And like I said, it should work here too. Green outline. Fair value is here. You get a blue dot before it pulls back and bounces. That's confirmed here. You could long inside of here. And that one just stops. Right there. So that one just stops. Because it's not that bullish anymore. And to be honest, you got the blue dot really late. You really want it like here. Like within the... I wonder if there's a certain number of... This one's 1, 2, 3, 4. And it's definitely late. This one, 1, 2, 3, and it technically works. And then where's the other one where we got a blue dot? Here. 1, 2, 3, 4. That one works. So, I wonder if maybe we need a down bar, like a bar in the opposite direction first. That might help. Not sure. Okay, so the next green or red outline. The blue outline is just the gold in reverse. So that's the, he's getting it at a discount, repricing lower, expecting price to go lower, and selling even though it's a discount. And then when he gets beat, they get squeezed. But really, you have to beat the dot behind him to change the trend, interestingly. So this guy, fair value is right here. We talked about it in the reverse with the gold, but I know that that's dangerous to get in there because fair value is like right there, and yet I've got signs that he's selling at a discount. So if I can get VPOC on a bull bar behind that, like this, you're gonna squeeze out of here. But really, for the trend to change, I need to get above this, which doesn't happen. Not actually traps back in. Okay. And then like here, this is the fair value, and he's selling at a discount, right? So normally I'd wait for it to get there, and then I'd expect it to turn around. And it never even sets up here. So here, green, right? We'd want preferably to get under that and then come back, but we don't get under it. And then 1, 2, 3, the third bar and right after a bear bar has a dot, and it goes. So again, you'd be confirmed that dot will stay once you get a bull bar here. If it's bullish, it'll stay. And sometimes it'll stay when it's going the other direction, but every once in a while they will disappear and then you have to be careful. So you can technically get in here, but if it starts to drop and it disappears, you want to usually exit. Um, but if it is bullish, it's not going to disappear. So you could enter wherever you think it's clear that it isn't turning around, or here is where you're confirmed that you know it's not disappearing, as the next bar closes. And it gives you plenty of risk reward. Okay, so we need green. All right, so here's another green. We want to get under it. They don't. They go higher. That's my first blue dot. There's no down bars, and it's 1, 2, 3, 4. Is that too late? Kinda. But if you get a pullback to that level, can that be bought? Yes. As long as it's trending. Okay, then we get a red one. Okay, note we get red, no yellow, pullback, gets behind it. So now I need to watch the yellow line and make sure I don't get it above that high on a bull bar that's not pink. Otherwise, it's invalidated. But if I do turn around here on like the next bar, or if the next bar is pink and then it turns around, I need a triangle down to short. So that invalidates the trade. And interestingly, I think there's an opportunity here for a bull now if we pull back a little bit and then blue dot. It might be blue dot triangle up. Yeah, because the thinking is, see, technically, it's invalidated there, right? Because we got behind it with volume. So the triangle down, it's not always going to work anymore once you've gotten volume behind it. Sometimes it still works like this, but it won't always work. But what I have seen is if it gets behind it and then just immediately goes, it can keep going. So I guess that might be more aggressive, but I'm pretty sure you need a triangle in that case, because this one, if anything would have done it, it would be this. And you're still above fair value, so you'd think if it was still bullish, it'd go. I wonder if you get it invalidated, but then you get a triangle down with VPOC below fair value, is that still good? You might just need to beat fair value, which is really hard when you've gotten behind the red bar. But if fair value doesn't shift and you get a triangle underneath it, I wonder if that's good enough. I honestly don't know. Excuse me, sorry, I'm still getting over cold. Okay, so can't get below it, right? 1, 2, 3, bull bar, but no bear bar before it. So getting in here when it confirms is pretty dangerous. Instead, I'd probably wait till here, I guess, at the same level as the dot. But the fact that we didn't get a down bar makes me nervous here. But it's clearly bullish. That's the point. You know it's bullish because they can't even get behind this. And if they did get behind it, I could still get long as they recovered it without putting volume behind it. That's the idea. Okay, so green and red. There's not that many. There, red. Okay, I need to get behind it or get a yellow dot. Get behind it without volume. So now they need a pink bar or a bear bar. Okay, they invalidated it. That got volume, the line beyond it, right? So now I'm wondering, fair value is way down here. So that's not going to trigger short, meaning it's probably long on a pullback. Okay, another red one. Got over it, invalidated. So, and see, no more yellow dots. The yellow dot here doesn't count. It's got to be yellow dot after that. I'm pretty sure it's got to be below this one. So, invalidated. Now, what I'm wondering, where's fair value? Oh God, it's all the way out down here. So, it's bullish then? It's possible that we have to come back to there. See, I wonder if this still works since I can target fair value. Does that happen? It does pull back still. So maybe there are situations where even if you do get volume above it, that the triangle down still works after the snatch and grab. I don't know. I'm sort of surprised to see that, honestly. But it appears to work anyway. Interesting. But like I said, I think it has to do with where fair value is. That it has room, or it's gotten beyond it, so it's able to move. Otherwise, it gets stuck like this when fair value is right in the same spot as where price is. Price can't really move without some momentum. And here, all the momentum's going up, so it normally wouldn't be able to pull back much. All right, so red, right? Yellow dot. This is perfect. So that's the kind of spot where it's like, okay, they tried to pull back, but they couldn't get behind it, and then I got a yellow dot. So if the next bar, by here, I know that yellow dot exists. So I definitely want to be bearish here. But this one also had a star and an X. So if I see this, I'm good enough to sell that usually. And it goes to fair value, which is what I want. And then I'm done with the trade there. That's why I said, like, I don't know if you can really get in here. Because there's no risk reward here. Your stop goes up there. So you get back to fair value, and that's just what you expect to normally happen, unless you got over it. Okay. Now we get behind it with a pink, and then behind it with a full bar. Does triangle down work? Probably only gets us a fair value. It works anyway. Interesting. Usually it seems if you get behind it and then you can take it back with a triangle in that direction, it's actually going through fair value in this case. I haven't seen that happen very often, but interesting. So you certainly don't want to fight that triangle that's lined up with a red one. You don't want to fight that. Or green. Green outline, not this. Okay. Red. Tries to pull back. Gets a yellow dot. Wow, I don't know what to do about this because fair value is right here. And I haven't gotten a VPOC below fair value yet. Well, one way or another, it would have to get a triangle down now. And it just doesn't cut. Perfect. That's what I want. Because here, too, if I got triangle down, I think I'd have to take it as long as it was beyond fair value. But it's not going to trigger. Now, in this case, that looks pretty bullish. So I wonder if once it tries to get the triangle down like this, but it fails, can you buy that? Or is that... Wow. Yeah, like, it hasn't invalidated it. It hasn't gotten volume above it yet. Now it has. But maybe I do have to wait for that. But we saw before that sometimes that means it still turns around. But we're clearly bouncing off of fair value here. This one just looks a lot clearer, and I'm trying to objectify how I know. Oh, is it this trapped seller, maybe? But one way or another, triangle up beyond it seems pretty strong. If it didn't trigger. Okay, so red. The trigger would be get behind that, turn around with triangle down. Instead, we get behind it with triangle up. VPOC above it, above fair value. That's got to be long. That's got to be a long. Oh, is it specifically dot triangle up? Dot triangle up. Ah. And VPOC beyond the red. Dot triangle up, VPOC around beyond the red, even if it's pink. That's cool. Let's see if that continues. Like I said, I'll check yesterday too. Okay, so here's one. Doesn't come back, but no dot. Okay, starts to come back. Fair value is right here. I can't really take a trade under that. Oh, there we go. Blue dot. Now triangle up. There. That should be good. Phew. I was like, whoa. Yep. And so stop goes down here. Pulls back a little bit, but looks good. And then this one, no dot. Pulls back. potentially invalidated with a dot. So now triangle up. No triangle up. And it does go. Reclaims that. That's bearish. Because we took it back. And then we took fair value with dot, triangle down. That seems... Maybe you don't even need the red or green for that to work. Huh. I don't know about that. That'd be pretty sick. Because look. Dot, triangle up, above fair value. Does it go higher? Yep. Particularly with the trend, that might actually work. Dot, triangle up above fair value. Yeah, and then you're gonna get crushed, I bet, here. Yep. So what's the difference between this and this? What I normally want here is a pullback with a dot that I could buy. This one did not have any gold bars. This one did, making this very vulnerable. And no matter what, it makes sense to come back to fair value. I don't know about that one. No red there, right? Okay, there's a green one. Green. So I want to get behind that if possible, but instead I get a dot, but no triangle, so nothing to do. And then look, fair value shifted up. That's a little dangerous, especially on a pink bar. Then they turn it back around. Let's see what they do when they get here. So they invalidate the long. And now, do they get triangle down? No, but they do get another bar below fair value. And it continues. Maybe it doesn't have to be a triangle. Just getting another bar after the dot. It's got to be maybe only beyond a swing. That might be it. Maybe it doesn't have to be green or red bar, but it has to be a pivot. That'd be pretty cool. Okay. Green. No blue dots. Pull back. Okay, invalidated snatch and grab. I don't want to buy. So now, let's see if I can get a yellow and then a triangle down. Nope. I just get another green. So now, I need to get under that and come back, or get a blue dot. Okay, under that on a purple. That's perfect. Now I want it to bounce, and it doesn't. Invalidated. So now, to be bullish, I got to get above that. Otherwise, bear on a dot, triangle down beyond fair value. That'd be a short, and it works. It's just a scalp. Okay, green. Oh, and then you're not. The reason it's a scalp is because you're not bullish unless you get over that, and the pivots usually land on yellow dots. Not always, but usually. So here's this. No dots. No, there's a dot, but it's 1, 2, 3, 4. And I don't know about it till here. Can I buy this? Oh, that looks good. It's choppy as F. It's got this pivot here. See, this one tries to come up, and they try to defend it, but they can't get triangle down. That they didn't get yellow dot triangle down, and then they try to get the snatch and grab, and they can't get triangle down. That's clearly bullish. Then it's just a matter of how do you get in. And like I said before, we had a similar situation where you have a star that gets trapped. And so I think you get in here. No. You have to wait for the pullback. Interesting. You did trap them right there. Did they come back to it? How did this not get bearish? Because they got above it. Oh, they tried to reclaim it, but they couldn't get volume below it. They only put a purple bar, which has very low volume. Wow. So that's just a failed sell. Because usually, if you have an aggressive trader and you stop them out with volume, and then you fall back through the point of volume where that aggressive trader was, and you put volume back in underneath this, basically reclaiming it, it's usually bearish. But look, they held right there, and that's the bounce. I've seen that work before, but I haven't been watching for that. Okay, so green and a red. So we get behind red, and then we invalidate. Green, we can't get behind. Dot. Yeah, no triangle. Is that too late? It's gold, too. Yeah, too late when it's gold for sure to do dots. Okay, good to know. But, again, just invalidating it. Well, red got invalidated. And now we have a triangle down. And that doesn't make it good unless, I believe, it gets under fair value at that point, which is like here. So it's not bearish. Fair value has been left behind. That's clear. Okay, green. Gold. Now get behind it. There we go. Test behind it with a wick. Come back. Now triangle up. That is your ideal entry. It stops. Wow, they did it twice. That's brutal. So it's probably because it's not a pivot. It may need to be a green bar at a pivot. This one is not positioned properly. It's way at the top of the channel, and it's not at the pivot. It's way up here. And so it tries, but I know the pink with the white diamond followed by pink triangle up is pretty dangerous to buy. But it's funny the second time it works. Did they trap somebody? They trapped this one. Yeah. He's really susceptible to getting trapped. These dots are really strong divergence bars. But if you get volume above this, it can wreak havoc. Like that. Okay, so this one's poorly positioned. Does it? Wick behind, no triangle up. Okay, triangle, no. And then we just put there, triangle up above this. Does that work? Yep. So even though this one's poorly positioned, it took forever. Oh, but we had this with a dot. Also triggered. So maybe it needs a dot or a flag. And these, without the flag, are just like short term. Interesting that it actually got tested, but then they couldn't. They just got pink bars, so it's just like a squeeze. And then they retraced, but they couldn't go anywhere, so it went again. But this is perfect. Green with a dot, tested below, recovered, triangle up, above fair value. Just here. VPOC above fair value. Boom. And I took multiples of those today, so I know there's at least a few more, or maybe that is it. Okay, so look, this one's way out of place, and it's got a dot. That's really sketch. So we invalidated the snatch and grab, but then we put another red in, and like I said, the green getting immediately beat by a red and a star. That's not good. No triangle. Okay, green. Oh, that's right now. Okay, let me show you what it would look like yesterday. Wednesday. Because Wednesday, we started going up, and then we turned around. Okay, so initially, after econ or whatever, okay, so green and red. So here's a red out of place. Got behind it, but not with volume. Triangle down works. Here's a green. Can't get behind it. Blue dot. Triangle up. You know it's bullish. Buy. Go. And again, fair value in this case needs to be achieved. And I don't know if it's this one. It must be. Because otherwise it'd have to be the dot. Yeah, so it's... I think it's this, where it triggered. But in that case, it's very risky to get in there. Maybe it just happened to work because it was the open. Anyway, this one was not tested. So normally blue dot, triangle up, but we didn't get it here. And we have gold bars, which is dangerous to buy, unless it's squeezing. So, and there's no red there, right? Oh, this one, but that's it. We talked about that. Okay, so no green, no red. Red, tested by like a tick. Triangle down, lower. Green, unable to get behind. And then pull back, blue dot, triangle up. Clearly above this. Oh, I guess in that case, this one is okay because it's not the it is the green bar. It's here. Yeah. Okay. So, because we left and then got the rip, does that make this one okay to buy? It's so far away though. Do I really want to buy up here? Like that's my target. Yeah, that doesn't work at all. So if you get too far away from it, it is a problem. Even though you've got VPOC above fair value, there's just nothing left. So it's got to be, the dot has to come soon. Okay, no red or green here. Green. Can't pull back. That's what you really want it to look like, is up, tries to pull back, turns around with blue, and then triangle up. That's usually good for a scalp, if it's bullish. And here it's questionable. But one way or another, you did get to here. So not too bad. See how the blue acts as resistance? That's very normal. Okay, look. Green, invalidated. So we know it's bearish usually. And then I wonder if yellow dot works now. Wow. Okay, green. Test behind. Snatch and grab right there. Fair value at the green is here, and you are above it. So buy this or any of this. Yep. And you get the scalp. It's not a huge trade. It's just a scalp. Okay. Coming back. See, it got the dot, but it didn't get triangle up, so we're waiting. Although that one was green too, so that one's been invalidated. And then this one, test underneath, came back with green. We need a triangle up. Yeah, invalidated. So is yellow good? Yellow. I don't know how to tell. That's pretty, you'd have to think that it's really dropping to do that. But it kind of makes sense. That you shouldn't get yellow dots here after invalidating this trade if it's not bearish. Oh, you know what might work is once you've gotten that, getting VPOC above it right there is probably bullish. Nope. Never mind. Yeah, I don't know how to catch the continuation when it invalidates the long. Okay, well, here's this one. Invalidated. See, but then yellow. It seems like it works a lot. It just has to be trending. Green. Invalidated it there. And then they try. I know for sure we know it's not bullish unless it beats that. Is that just the way to think about it? Like, every time these get invalidated, you just say, okay, invalidated there. So, not bullish unless this gets broken, I guess. And then invalidated here. So not bullish unless it gets above this. Oh, this got invalidated as well here. So it needs to get above that. Needs to get above that once they put in this. So it's bearish, but it's not necessarily an entry when they're invalidated. Okay, then this one invalidated right there. Bullish, only bullish if it gets above that or sets up lower. And then there, invalidated there, bullish above this, or only bullish, bearish unless it gets above that. Okay, there's the snatch and grab. Green, wick below, triangle up. If it's bullish, that will lift, but we know that it's not bullish unless it gets above that. So our target is that. And sometimes you get above it, and now dot triangle up is bullish because it's bullish once you get volume above that. So that should continue. All right. High or low, can't get below it, dot. Oh, that should be a triangle, you'd think. Oh, and then fair value is way up there. So is that our target? Maybe I don't take this one. Ha! No triangle, no take. I like it. Okay, green. This got invalidated right there. Invalidated. Not bullish unless it gets above this. So I'm not going to buy that yet. It might work. There. Now bullish. Fair value is here. I want it to pull back and then get above fair value. Blue. No triangle up. Yeah, just gold. Not good enough. There. Blue triangle up above the fair value. This. That should be good. Yep. So that's how that works when it's squeezing and trending. Is you just need to know where fair value was when it triggered. Snatch and grab here, right? Red, wick behind, triangle down. That should be bearish. And, oh, but your target is here. See that? You've hit your target now. Now it's bearish. It just keeps going. Okay, this one. No triangle up. Invalidated right there. Bearish unless it gets above this. Yellow dot. No triangle. And it's blue. It's probably not a good idea to buy it, to sell it. And interesting, once again, it immediately reverses. So I almost wonder if when you get the late dot like this, where you can't get behind it for the snatch and grab, and it keeps going and you get blue or yellow, and then you get the dot, it almost seems like beating a triangle, or beating that dot with a triangle might be a good scalp in the opposite direction. Note they can't get above this, so it's balanced to bearish. That triangle should be good because we came back to that level and then triangle down if we reject there without getting volume. That's what it really needs to do. It needs to go back to the level and then reject. It doesn't necessarily have to get behind it, but it usually does. But if you want to use the triangle in that situation, you have to wait until they pull back and try to invalidate it. And if they can't, and you get a triangle in the same direction as the colored bar, it's a sign that that side is in control. And then dot for the late entry. So this black dot, if that gets beat, we're bullish. Yeah, bearish. Very. Ring X, very bearish. Can't beat that. Pink bar only. That's probably triangle down. So this was an entry. When you get ring X, and it went down to this previous point of control. Then they went back up. They tried to beat it, but they could only put a pink bar above that critical linchpin. And look, there's a fair value right here that they rejected. So this triangle down should be good as well. I'm wrong. Wow. Oh, it's because of this level. They just ran into level and bounced it. Bastards. That's got to be it. Interesting, though. What if you use this? No, you'd still catch it. See, this is such a big wick. That's rough. Oh, fair value is up. Ah, fair value in this case is here. That's your target for the short, and you didn't even reach it, but that's not good risk reward. Okay. And then if this was red, that would be an entry. But again, that's your target, so wouldn't do it. What you need is this to be red, because then your fair value is there, and you're clearly beating it now. And on a higher time frame, it might have been. No, not there. 42. Because this does work on every time frame, so. Nope. Whoops. Okay, so. No great way to catch that one, I guess. Not with this method. Okay, so green invalidated right there. Goes lower. And then, yeah, invalidated. Pink. Oh, but, and then blue. I'm sorry. Yellow, and then blue. Triangle up. Beat the blue. You can squeeze. But again, fair value is way up here from the green. So it makes sense that you ride it back there. In other words, they couldn't put any volume down here. So the market just returns to where all the volume was. Red. This one looks like it's going to work. Red. Get behind but not volume. Come back with triangle down. You're below your fair value. Should be working. Wow. One more time. Did they miss it by like... Maybe. It's this stupid level here that is acting... It's acting like a magnet in this case. And the other way it was in our way. But yeah, you'd have to put your stop above that. It'd be that important level in general. There's just too many traders targeting it. Other than that, it works. And then a dot, triangle down. Green. Get under it. Can't get triangle up. Green. Get under it. Triangle up. That should be good as long as fair value is low. Where's fair value? Oh, interesting. So for this one, fair value is way up here. So I could target that. But it also did it on this one, right? And so you could put fair value here, and now that should work. In addition, you have a ring. The ring basically works the same way. You have ring, and then establish support, triangle up, and you get a lift. That's how those usually work. Okay, this one got invalidated there. And then red coming back. Is that... That's interesting. That's not the first time I've seen that happen. It happened here too. Oh, it didn't invalidate here though. But here it technically got volume above, but then it printed another red bar. Yeah, that's cool. So it looks like it's bullish here. But then you get another trap buyer, which is what these are showing. And then when you get triangle down, that's probably good. Even though it's invalidated. So maybe I should use a different word. It's like you're on pause basically here. Once you get above it with volume. Because it can still work. You just need to beat that. Is it that simple? You just have to get beyond it? Okay, green. So here... Green. Blue again. But look, the only volume we can get below it was in a purple bar, so that's very low volume. And then we know the blue bars can be, when they're all by themselves like this, they can get squeezed out. And then, especially when fair value is right there, that's very dangerous. And then you get under it, wick up, triangle up. The only issue is fair value is way up here, but that could be a good thing because that's probably where we're headed. Doesn't quite make it there. No, it probably does. Oh, no. This gets in the way. That triggers if you get a triangle down. This fair value is way down here. You can take that. And target hit. Okay, now they're doing it to this one. Get under, triangle up. Fair value here. We're above it. Should be good. Stop goes down here, under the triangle. Yeah, they kind of got stuck in here. That's too bad. Okay. This one got on pause here. So what happens if I get volume above that? Can't do it there. And then we have another green one. Right there. Anything happen there? Green, dot, triangle up. And it got above this bar that got below this one. Is that bullish? Ah, okay, that helps. So rather than saying it's invalidated, what we're going to say is when you get volume below the green bar like this, that puts the buyers on pause until you break that with volume, which happens right there. And then sometimes you have to break it and then wait for the setup. Yeah, that's cool. Okay, so this one, pause. Bearish under that. They can't do it. Red. Pause. Bearish under that. They can't do it yet. There. No volume. No volume. Ha! Buy. Is my guess. Because they can't get under it with volume. Look at that. That's pretty neat. Okay, well, how about this one? Well, first of all, couldn't get right behind it, but got a dot late, and it's purple. So that's definitely aggressive. Okay, there's the pause. You got to get under that with volume. Otherwise, it's bullish. So that becomes like your stop, basically. Your turning point. Not yet. Volume's up here. Purple. There. So bearish, but I probably need an entry signal. Yeah. So it's bearish right here, but like, doesn't really matter anymore. Wait, did I do that right? Where's the green bar? Pause. Oh, that's right. It's underneath the pause bar. And it's, yeah, it's just so late. And so it's going to come back and test this, I bet. Yep. Look at that. So that's probably okay. Come back to test the pause bar. Oh. How often does that work? That's cool. Okay, green. Let's try it again. Can't get under it. It's, and I mean, blue, blue, blue. And then there's some with no blue. Get above that. It's probably bullish. Okay, green. Yeah, see, this is, if it's triangle up, that is the snatch and grab. We got under it without volume, came back, even better when it's green, and then triangle up. So it's just bullish. Oh, it failed. That's rare. And again, when it does fail, it's usually because fair value is too high, which is not the case here. Or you've got buyers trapped above you. Oh, I see it. This shifted down. Buyers trapped above you. That sucks. So I have to be, I've made this mistake before. If I'm buying, it's against the trend. See that? And you can do this at the top too. You can make the same mistake at the top. But if you have a pullback like this, that's shallow, right? Wherever the volume was up here, if we've gotten under that, like this, with some volume, that's going to act as resistance on the way back up. So really the problem here is that this wave, this rotation, is too small. Like this one works as a V because it's got 1, 2, 3, 4, 5 bars before the reversal. Here you have 1 and then 2, 3. And then you can see that you have a green bar and then it was immediately beat. Right? Which already is kind of suspicious. They don't get beat easily. And it's got a dot on it, which is really bullish. So like, but you do need a triangle after it or above it to confirm that. And so if you can't get above it on that dot, it's not bullish. And then you've got a dot down here. And if you can get a bar that's not pink above that, it's bullish. But this one's pink. So just everything all together, it just doesn't quite work. But that's hard to see. But that is, see, we want this down here, not in a consolidation. Consolidations need to look different than support. Because the way this works is if this is support, you have a buyer that gets stopped out and then recovered. That's really what we're doing. But if that recovery occurs right where someone else got trapped, it's not going to matter. Okay, this one worked though. So look, you go up and then 1, 2, 3, 4. A little more room. You get under with only a purple bar. Come back with triangle up. Now the problem here is fair value is above us. So this might stall. It doesn't. It actually works. So this one's better because it's not like the first attempt during the consolidation. They actually stop someone out, right? And now it can recover. That's usually how this works. It's very rare to see that, except for at the lows. Usually in consolidation, you have up, someone gets stuck buying, they repel against him, then stop him out, and now it's free to go, which we talked about a little bit earlier. So dot, triangle up, almost always good. Did I miss a red one? That's okay. Red. There it is. Snatch and grab. So now we need triangle down. Oh, another red. I wonder what happens now. Wow. So this one just had a really big wick and trapped another buyer. It's probably fine. Oh, that's right. Stars can replace triangles. I forgot. So a star or a triangle. I've seen that before. That happened yesterday and I talked about it in the one I had to delete because I forgot to put the screen up for the second half. Okay, so this one's red. So if we get above that, we could set up. And we don't, but you can see the first yellow is really low. It's on a small bar. It's on a purple bar. Like, it looks bearish, but support's right here. Yeah, that dot really needs to be on like a pullback, an attempt to pull back. Okay, this one too just goes, and look how late that is. It's not much. And then a blue one, be very careful. Oh, green. So this is 1, 2, 3. You can probably do that. Oh, but no triangle. So, no. Yep. So you do need that triangle. Interesting. Which means you probably need a pullback first. Most of the time. Otherwise, you need this to hold. I guess. Let's see if this does anything. Okay, so that's the pause. Beat that with volume. Okay, another one. That's the pause. Another one. They can't beat it. And we said that's bearish. Right there. That's the setup. Cool. I like that. Again, you're right into this previous VPOX, so dangerous, but still. The idea is stop them out, beat that and it's bullish, reject it and it's bearish. Here, that's the trade. Triangle up. Fair value was here. You're right on it, so you might want to wait. This one clearly got above it. Triangle above fair value after a snatch and grab. In fact, two of them. That's got to work, right? Wow. Okay. Pause here. It's beat. So not bullish. Let's see. That's interesting. Oh yeah, just came back to, I couldn't remember why I marked that. That's fair value. Makes sense. Pull back to fair value bounce. Bullish. This is what I was talking about. The low. That's the low of yesterday, Wednesday. That is bullish. Okay, so triangle up. That. Oh, fair value's up here. This might be dangerous. Do we get a pullback? Yeah. Cool. Okay, so that's good to know. That really does seem to matter. Red. Fair value was here. Did I get beyond that with the triangle? Yes, that should work. Wow. Okay. Green. That's a snatch and grab. There's only a purple underneath it, and it comes back with a triangle. And are we above fair value? Yes, that should work. Wow. Like I said, some of them stop, but most of them don't. There. That one too. Below fair value. Short. Probably back to here. Look at that. Like a magician. Okay, then purple. So we got this one. Okay, pause. Unless we get over that. And then reject it, and it's bearish. Yeah, and it just can't do it. But we got the short. That's what matters. Wow. Awesome. That's overnight. Not going to be as many. Here. Snatch, grab. So, are we beyond fair value? Yes, it should be okay. You should be able to put your stop now. After this, you should be able to put your stop under that. And get in anywhere in here, in this pullback. Long, all night, all day. Done. Easy. Easy game. Okay. Green. Yeah, can't pull back. Dot, beat, dot, triangle up. It's probably bullish. Right? But I wish I had a way. I wonder the fact that fair value shifted up and then they continued to buy as fair value went sideways. Does that make triangles better too? Maybe. Okay, this one, that's the pause. Yeah, bullish. Wow. Look at that. So this is clearly an important level. You can't put your stop there with the pink bars behind you. And especially with fair value having shifted. Right? Because this is all based on the red one. So the red, you get behind it with only pink bars. Then you get behind it with a bull bar. You have to pause your selling, right? It's probably bullish unless you can get volume below that, and you can't. So it's bullish. And then here, snatch and grab if it's triangle down. But then this one too. No triangle down. This one did not get beat. Blue, triangle up. This is exactly how you want it to look. And then this one's fair value was here. We're clearly above it. It's not going to pull back. It's just going to go. And that's how it works. Okay, so here, I'm not going to get behind it. Fair value is way at the low. We shifted. We pushed beyond it. So now, blue dots. Yeah, sorry, yellow dots. That is a short, I bet. Yep. That works. Okay, here, same thing. Fair value dropped. Yellow. Fair value dropped from the red. We moved away from it. So yellow dots. As long as that holds. Does not hold. Broken. Is that bullish? No. Because of this. So now red, snatch and grab. That should be bearish. And it's probably going to stop. It does. Because we're right into support. So then this one, fair value is way up here. Ooh, that's close. But does not beat it. Right? Blue triangle up. Doesn't get above fair value. It needs to pull back. It's probably bullish. But we need a pullback. Oh, wow. That ends up going lower. Interesting. So this did test. We got below. Triangle down. You'd think that's good. They just did it twice. I wonder if there was a red bar on a higher time frame. I don't know. That's frustrating. It just happened. You just needed to try it twice. Now, we did get the ring. And we know if you have established support and then ring triangle down, that's usually good. And then plus, price moving away from fair value, followed by a yellow dot, usually goes lower. So those still work. It's just not the newest one that I'm sharing. And then this invalidated or paused here on the blue one. So here, you'd think bearish if they can reject against that. They can't. And then here, green. This is where fair value is. We moved price away from fair value. Came back, blue dot. That's bullish. Boom. Okay. And then red. So pause. Ooh. Right there. Bullish. Or sorry, bearish. Yeah, bearish. And slightly away. Pulled back. That's harder. But that one is clear. Oh, that's way late though. Look how far away you are. Okay. Price moves away. Dot. Very far away. Yeah. That's probably better. Oh, interesting. Oh, well, yeah. It didn't get... Neither of them got a triangle. Move price away. I'm not sure about that. It might need to be a pink bar or a triangle that moves the price away from the fair value. Otherwise, it seems they get trapped up there. Yeah, I'm not sure what to do exactly when it just goes. Other than just know it's bullish. Well, it did come back to fair value, didn't it? Fair value on the green one was here, but on the triangle up, it was here, and that's right where they came to. I don't know how often that works, but certainly interesting. Here's the ring again. Establish support, ring, triangle down, goes lower. And lower. Okay, green. Only purple below, triangle up. Is it above fair value? Yes. It's a buy immediately. And that one stops. And again, if you look at this, you are probably just below. Yep. Right on it. The point where they all got trapped. Interesting. So this is when they don't work. Yeah. You're stuck. And then yeah, see, there's buyers up here. And fair value is there. And that's exactly where you turn. So certainly if you see that, you know you're done with it. But it's really just all of this choppiness being right above you. You can't look for this entry there. It just doesn't work very well there. It works better after a big drop. Okay, so that one didn't get here. This is what I like. Fair value. Pink bar leaves the area. Comes back. Blue dot. That should be bullish. Yep. And see, after all of this consolidation, we stopped them out. Right? And then stabilized. Plus ring, support, triangle up. So either one of those I think is fine. Oh, it's getting late. Okay. This is today now. Did we already do today? Yeah, see, fair value is way up here. Triangle up. But not the dot. That's pretty tough. That's right at the open, but... Oh, but we trapped this guy. So triangle up above the trapped X. I wonder if it's even triangle up above the trapped X's VPOC. I don't know. Definitely this one. He's clearly trapped at a low. I think we did these already. Pretty certain we did, because I remember this. Okay, so you get the idea, I'm sure. That's all I got for today. If you want to get a hold of me on Twitter, it's at RedBenTrader. If you want more information about using the algo, or if you want to check out the trading room, email my coach Simon, trade letter N, word perform, ask for a 5-day free pass to the room, and